Picture this. Your credit score is actually higher after completing your consumer proposal. You're getting approved for loans and credit cards again. This video shows you exactly how to rebuild your credit after filing the consumer proposal. Is rebuilding your credit even possible while you're still in the consumer proposal? I'll explain how soon you can start improving your credit. We're going to talk about the practical, actionable steps you can take right away to see your credit score steadily climb during your consumer proposal, including one simple credit building tool everyone can use, and exactly how fast you can realistically expect your credit score to improve so you can plan your financial recovery with confidence. Rebuilding your credit after a consumer proposal is like starting a fitness program after being out of shape. Yeah, at first it hurts, but acknowledging where you're starting from is essential to seeing improvements. Your credit score dropping initially is just like feeling sore after your first workout. Give it time and practice, and you can get right back into shape. Your credit score may be low now, but it doesn't mean it has to stay there until after your proposal is completed. So let's jump right into it. When you file the consumer proposal, your credit score likely went down. Don't feel bad about this. This happens to everyone, or everyone would want to file a consumer proposal, right? Here's the good news though. You don't have to wait 5 years or until your proposal is completed before rebuilding your credit score. You can start right now. When you filed that consumer proposal, you were given what's called an R7 rating on your credit report. And this is what lowers your credit score. As a comparison, a bankruptcy gives you an R9 rating. The R7 rating will stay on your credit report from 3 years from when your proposal is completed or 6 years from when initially started, whichever comes first. Keep in mind the payments you make to the licensed insolvency trustee for the consumer proposal do not get reported to the credit agencies. So even though you're making those payments every month, the credit bureaus don't actually see the activity. They're only notified when you file your proposal, if it gets annulled, and when it gets completed. I have clients call me complaining that they're 2 or 3 years into their consumer proposal and their credit score still hasn't improved, and they can't even get approved for a simple credit card. This is not surprising if you don't take steps to improve your credit score. Think of it from a bank's point of view. You filed a consumer proposal for your debts, so now are they going to be more likely or less likely to approve you for a new credit card? Obviously less likely, right? So they're now going to want to see signs that you've rehabilitated your spending and debt management before they approve you for credit cards and lines of credit. Because ultimately, if they lend you money, then they want to be paid back. They don't want to see you filing another consumer proposal for your debts. Now, if you have a secured debts like a mortgage or car loan, those can actually help rebuild your credit score. This is because when you make payments every month, it gets reported to the credit agencies, and this will help improve your credit score over time. That's some good news if you already have those. But what if you don't have secured debts and there's no activity on your credit report? Then you need to take more action to rebuild your score. An easy way to start rebuilding your credit is to apply for a secured credit card. Now, a secured credit card looks and acts just like a regular credit card. It has your name on it. You can use it everywhere that accepts credit cards as payment. However, it differs from a regular unsecured credit card because you need to give a deposit to the lender before you can use it as a credit card. It's kind of like a prepaid credit card you get at a gas station. However, this card has your name on it and will be reported to the credit agencies like a regular credit card. For example, you could give $500 to a credit card company and they will give you a credit limit of $500. Now, if you don't repay your balance, they'll apply your deposit to that balance. This protects them if you don't make payments. They need to trust you first. Think of it as training wheels for your credit card. Before you go back using a regular credit card, you need to make sure you're not overspending on it. Some companies that offer this in Canada are Capital One, Neo Financial, TD, and BMO. I'll put some links below in the description for you to take a look. A good idea would be to use the secured credit card for your usual monthly expenses instead of a debit card or cash. Things like groceries and gas. This way, you get in the habit of using your credit card and paying off the balances in full every month. It is very important to always make your payments before the due date, or else it could hurt your credit score. As your credit improves over time, you may receive credit card offers in the mail or you can apply for a new credit card and now you're more likely to get approved. The bank that gave you the secured credit card may also offer you an upgrade to a regular unsecured one. Here's something important though. Avoid too many credit applications within a short period while in a consumer proposal. Maybe space them out over 6 months and see if you can get approved. After a year or so, you may get offered an unsecured credit card. Accept the offer and continue to use it responsibly, like how you were using it with the secured credit card. You should also accept the higher credit limits offered. Just make sure you're never charging more to the card than you can repay back. It's really important not to get back into debt. Make sure you only make purchases on the card which you know you can pay back in full when the monthly credit card statement becomes due. Let me give you an example of two people to show you the difference in how to rebuild your credit after filing a consumer proposal. First one is Jake, who filed a consumer proposal with no mortgage and no finance vehicle. He just pays his proposal payments every month. After 5 years, there's no activity on his credit record for the whole 5-year period as he didn't apply for any debts. Second one is Sarah, who filed a consumer proposal the same time as Jake, but she's financing a vehicle. Then 3 months after filing the proposal, she applies for a secured credit card with a $300 limit. She uses that for her weekly grocery purchases. 1 year later, the same bank offers her an unsecured credit card for $1,000, which she uses and pays the balance in full every month. 2 years later, the credit card has its limit increased to $5,000, and she applies and receives another credit card with a $3,000 limit. Now, after 5 years, they both completed their proposal. Which one do you think has a higher credit score? Clearly, Sarah took action to improve her credit score by having activity on her credit record every month from her car and credit card payments. Your credit score won't magically increase by the end of the proposal. You need to take actions during the proposal to rebuild it. To rebuild your credit, it is beneficial to apply and use credit for your everyday purchases. But you want to make sure you don't get yourself back into trouble with the debts. Make sure any debts you take on can be repaid within the next month or two. Last thing you want to do is get trapped in the debt cycle again. You might also consider using credit monitoring tools such as Borrowell or Credit Karma. These can help track your progress and you see how your credit score is improving over time. But maybe don't track it every day. No need to get obsessed over it. You just want to make sure you're taking steps to improve your credit score and your actions are working. I don't suggest checking your credit score every day, maybe every month or two, just to get an idea if it's trending upwards. I have a lot of people ask me, how much will my credit score go up in 1 or 2 years? That's really difficult for me to answer. As discussed, there's a lot of variables that can affect how much and how quickly your credit score increases. Also, your credit score isn't standard at each bank. Everyone may calculate your credit score a little differently. My advice is to take actions to improve your credit score and check from time to time to make sure your score is going up, not down. Now you've seen exactly how Sarah improved her credit score by taking proactive steps during her consumer proposal. But there's another critical piece to the puzzle. That's ensuring you have a monthly budget to track your income and expenses. Why is this the next logical step? Even with the best credit building strategies, poor budgeting can put you right back into debt. Learning effective budgeting ensures you can confidently manage your new credit and maintain your improving credit score. So you're probably wondering, can budgeting really save you hundreds of dollars and you keep your credit score rising? Absolutely. Watch my next video, Can Budgeting Really Save You Hundreds? I'll show you exactly how mastering simple budgeting skills can help you stay out of debt for good. Hopefully you understand your credit score doesn't have to stay low for the whole time you're in a consumer proposal, but you need to take action to improve it.